Okay. Okay. Whatever. What are we doing here? Hold on. Almost ready. All right. Ready, 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 and I think we're ready. Huh. Well, no, that's not a good thing. I've got an idea. I think we got it. I think we do. Yes, 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 yes. Ooh. Start. Good, good. Connection too poor. No. All right. And there we go. All right. Well, see what happens. Okay, so live, 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 live. We are ready to roll. All right, let's see who's in the house. Uh-oh, we got to fix these cameras. Got to fix these cameras. There we go. Got to fix this camera. There we go. All right, let's see who's in the house tonight. Who do we got? We got Mr. Steve, Fidelity National Information Services. Oh, Steve, we'll check a look at that. Sit tight. All right, who do we have here? Tonight we have Nina, New York City Chulo, Time No More, Brady Lee, Richard Scannion, back again I see. Chaplain Campbell, how you doing? Dennis, Luca Light, okay. Another bun, another bites, okay. Dave Johnson, Bruce Asbury, cool. Puerto Rican, all right. Hemi, G83. Drew Patty 4. Good evening, Drew Patty 4. Double D, what's going on? Ollie Beans. Richard Homey. Okay. Steve, Surf Rider. Ortega, hello. I sold some yesterday and I didn't get anything today. When will they post the premium on? Wait a second, Ortega. If you sold it yesterday, or you should have got your premium yesterday. I don't know. Might have to call your broker on that one, or give me a buzz. Oh, the State of the Union. I really don't care. That's funny. State of the Union. Yep, up, down. You know what? I really don't care about it. It's what's going to happen is going to happen. You know, we little guys, we're going to get shit on no matter who's in the big chair. Angelco, good evening. Khan, Doobie, Ion, boy, oh boy. Okay. Lose a Goose, Dar Hyder, Bill, and Joey. All right. Who do we have here? Dudley, Josh Matthews, Black Lion, Kevo, Ninja. Did I read that right? Ninja? Dennis Taco Eater. Okay. Pablo, Dennis Taco Eater. One for you to fear. Back again. I see that. Papa. Renee, not a financial ad. Okay. I like that one. Cube. Old Man, BR. What's going on? Andre. Here to Bang. Well, you know, that's a little disturbing of a name. Steve Phillips. How you doing? Jack Miller. Dale LaBush. Scarlett. Billy Scarlett. What's going on? Richard Copeland. Jake. Zach Infinity. Frank Fernandez, Scarlet Billionaire. Nice to see you again, Scarlet. Freckled Queen, back again. Scuff Jean, Stephen Page, Scarlet, Yam, Mars, One for You to Fear. What was the site that shows the new listings every week? Hold that thought. Odem, Demon Taco, Mister, what's going on? Mad Mike, Beekeeper, PGGP. Okay, if you say so. Chris, KJ, you fool. KJ, you fool. I like that. That's a good one. Foamy, Vic, Scott Doby, Flory, Investing Commu. Okay. Heartless Ghost. All right, what do we have over here? Wow. This is an invitation. Okay. Thank you. Heartless Ghost, good evening. Low Risk Chris. Hey, Low Risk Chris, how are you doing today? What was the site? Okay, so one for you to fear. The site that you're looking at or you're thinking about is FinViz, Financial Visualization, finviz.com. Let me bring it back. Give me 1 second. Got my tooth. Who else do we have here? Hein, Reedster, Dr. J. Are you starting the Zoom? Yeah, the Zoom's already started. Anybody even over there? Yeah, there's nobody even over on the Zoom channel, which is kind of weird. Waiting on Dell to release earnings tomorrow. Sharperlatives in the house. William Fett. Felix. What's happening, Felix? Joseph. Cindy Richards back again. Donald, how you doing today? Now, why isn't it working? And let's try Zoom one more time. Oh, wrong freaking dates. What are we on? We're in the 24th. Now, there it is. I hit the wrong button. KJ, I hit the wrong button. That's funny. All right, anyway, where are we? Veda's dad, how you doing? Nick, Jerry, Curtis Miller. I've been looking at stocks a lot on Dividend Champions list, and it seems all are monthly options. Not all of them. And there are ways of trading the monthly optionable stocks. It's called dividend capturing as opposed to dividend capturing 2.0, what we're doing here. There's a lot of different strategies to use when you're looking at dividend stocks. That's just one of them. Dr. J, waiting on Dell. Kevo, is this a recording? No, Kevo, it's not a recording. What's your thoughts on Home Depot? Ooh. Dr. J, let's go. Uh-oh. P. Everly, dude, you asked me about that last night. It was a no last night. What makes you think it'll be a yes today? I got to admit, it's cute that you think I didn't notice that you asked me about SCHD last night and you're asking me again tonight. The answer's not going to change. No's and no. Pins was up yesterday after hours, up again today. Sharperlative, let's take a look at Pins. Pins, you say, P-I-N-S. Interesting. Let's take a gander. You ready? Well, first and foremost, before we go any further, my name is James. This is Dividend Stock Talk, brought to you by the 10MinuteTrader, where I invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent 1% per week. Sky Chief, how are you today? Bingo. Hey, it's me, Ronnie. What's going on? Always in the mood. I like that name. Always in the mood. All right, so let's take a look. What are we looking at? The high is here in August. The low was in the beginning of February. Last year, we're at 37. We hit 40 as the top. And we hit, 13 as a bottom? Down, up, down, up. Okay. So 16.95, the closest strike price we're going to see is going to be 17. That's 32. Well, yeah, we got one starting right off the bat. If we like pins, of course. Okay, so let's take a look. The last 30 days. The 24th right there. Here we go. Last 30 days. Yep, Michael switched channels. Sit tight. Okay, so take a gander. 30 days ago, we're at 26. We dropped down to 14 with a gap down. We jump up. Now she's coming back down again. Not quite what I'm looking for. Sorry. Sharp relative. Sorry, she went down, up. Now she's going back down again. Wait and see tomorrow. The bottom's here. That gap is going to fill. So she's going to come down a little bit before she turns around and goes back up again. Cotton Express wants to take a look at K-View. Well, let's take a look at K-View. K-V-U-E, K-View. Interesting. Here we are at the high of the year. The low, where was it? Where is it? Look at this. Down, up. How much higher can it keep going? I mean, think about it. Look at where the 30-day bottom was. Okay? She was down here. She's shooting up. I don't buy anything at the high. Now, don't get me wrong. We've been watching K-View for a while. But you got to stop at some point and say, you know what? I don't want to ride that ride anymore. Because she was at 14. Now she jumped to 19. That's $5. $5 on a $14 stock is over 30%. So no, I don't want to take that chance. I'm more for safety. So what else do we got? Nothing down there. All right, all right, all right. So Dr. J was waiting for Dell. Well, what's happening with Dell? Well, let's take a look. Here's the high, the low. Where was it? Where is it? Down, up, down, up. Well, what's going on right there? Zoom in a little closer just to get an idea of what's going on. Okay, the 24th would be right about there. Here's our last 30 days. 30-day high, 30-day bottom. Okay, she shot up, pulled back, shot up again. It looks like it's going up, but we have a lower high and a higher low. It's creating one of those pennants, if you ever seen one of those. For those of you who like to sit and watch stocks all day long, stock charts, yeah, they call that a pennant forming. Yeah. But I'm going to sit and wait. I like to 2 days to the upside. So as soon as it decides where it's going to go, then I'll go from there. Perfect video to pop up. Thank you, O'Day. Cotton Express, Hormel. Didn't we look at Hormel last night? Pretty sure we did. And it was going to be a no because it's at a high at the moment. Think about it. 30 days ago, we shoot up, drop down, shoot up again. There's no opportunity there anymore. That opportunity was last week. Okay? You should have saw it. Last week we saw it. We bought it last week because 30-day top, 30-day bottom, boom, boom, there you go. Jump in, take it for the ride. KHC. Tom Smith, INSM. What is that? INSM. Insmed. No. Okay, Tom. Now, Tom, you're new here because I would remember. Eddie, thank you for that. See, I would remember, but I don't do monthlies. That March, April, May, July, August, January. It just doesn't make sense to me. Okay, because monthlies just don't pay the same as the weeklies do. Ask yourself the question, do I want 1% a week or 1% a month? It's a big difference between 12% and 50%. So I'm going to take the weekly, not the monthly. It just doesn't work out. It's never worked out for me. So I just don't do it. Chris Willard wants to take a look at Bank of America. Well, Bank of America is on the list of 100-year-old companies because it's over 100 years old. It's not going anywhere. But look at what it did. The high, the low, where was it? Where is it? Look at it. Down, up, down. It's actually in a downward trend at the moment, which is good once it finds the bottom. Because that's what it's doing. It's looking for a new bottom. We were here at 52, jumped up to 57. Now we're back down to 49. So, up, down. Well, wait for the bottom to show up. I'm going to put Bank of America on the list for tomorrow or for this week, because that baby is going to show up with a bottom sooner or later. BAC. But not yet. We got to wait for the bottom to show up first. Uh-oh. Cindy Richards wants to take a look at General Mills. And unfortunately, Cindy, I don't do monthly options. The numbers just don't work in my favor. They're nothing more than a waste of time for me because it's not what I'm looking for. Now, you may like it, but look at the last 30 days. Look at what it's doing. Down, up, down. Now she's going back up again. Well, fine. But I don't do monthly options. And I'm looking for weekly cash flow. So weekly cash flow, I need something that trades on a weekly basis. And this ain't it. But thank you there, Cindy. Kava, what's going on? Cute Everdog. Okay. April Scott, good evening. Blinders, how are you? Sam, I don't know. All right, Cindy, you're welcome. All right, so what else are we looking at? We looked at K-View. We looked at Dell. We looked at Hormel. INSM, we looked at that. Ooh, Cotton wants to take a look at KHC, which is Kraft Heinz Ketchup. KHC. There we go. Check it out. The high, the low, where was it? Where is it? Look at this. Down, up, down, up. All right. 24.78. I've jumped right in and take a look at the 24.50s or the 25s. Or, better yet, considering there's only 3 days left for this week, Wednesday, Thursday, Friday, we're going to have to start looking at next week's numbers. Because this week's numbers, they're not looking that good because there's only 3 days left. Now think about it. Okay? You got 5 days, which makes up 100% of the week. 5 days. 20, 40, 60, 80, 100. 100%. So Monday and Tuesday are gone, so we just lost 40% of our earning potential. So I don't like trading on Wednesdays and Thursdays for this week. It means I'm going to have to push them out for next week. Not the 27th of February, this Friday. We're going to have to start looking at the 6th of March, which is next Friday. Because 3 days is not enough time to get a full 1%. So we're going to go look at next week's. So we're going to close that out and open up the 6th. So Kraft Heinz for next Friday. Well, this is where it's now. It looks like it could keep going up. And the 25 is paying 27, which is over 1%. So let's take a look at Kraft Heinz. Let's take a gander the last 30 days. What do you think? Down, up, down, up. It's just following the trend, following the money. What are other buyers and sellers doing? Well, other buyers and sellers are buying because it's going up. And we got 13 million shares traded today. Those numbers look good. But ask yourself the question, do I like Kraft Heinz? Keep in mind, the company's over 100 years old. They have increased their profits for 5 decades. That's 10, 20, 30, 40, 50 years. Len, I got a question. Stock like SMR gets 5% weekly but doesn't fit your other rules. Would you invest? Len, I actually have some SMR. We're going to take a look at that next, so sit tight. All right, we got some questions down here. TSX, we'll take a look at that one next. Nobody, all right? So let's take a look at Kraft Heinz because it looks good. 100-year-old company, dividend king. It's in a nice little uptrend. I love uptrends. You follow them until they're done. We're only looking for 1% this week. Great, let's take it. Get out of there. Let's change it to covered calls Because covered calls is what I like, because they're simple, they're easy, they're safe, predictable, consistent. I love all those. Going the wrong way. I'm going the wrong way with this thing. Find the right button there, dude. All right. This is what the order should look like. This is what it should sound like. Are you ready? By one covered call of KHC, which is Kraft Heinz. 6 March. That's not this Friday, it's next Friday. Now, I like weekly options because you can trade them every single week and I can get weekly cash flow. But here's the thing. I do my trading on Monday and Tuesday. So Wednesday, Thursday, Friday, all my money's tied up, but I still want to be here to answer questions for you guys and to take a look at maybe what we might have coming up next week. Because you got 3 more days and then this week is over, and then I'm going to have to figure out what am I going to do next week. It's a burden. I got to do it every single week. Boo-hoo for me. It's kind of like washing my hair, shaving. I got to do it every once in a while. All right, so here we go. To find out our rate of return, we're going to take a look at what the profit is. Here we go. Max profit, 53 bucks. Okay. To find out the rate of return, we have to divide it by the investment. Cost of the trade, including commissions and fees. 2,400 bucks. So ask yourself the question. I'm looking to create weekly cash flowing assets. Something that I can put money into and get money back every single week. Kind of like a vending machine, gumball machine, candy machine, soda machine, a cigarette machine. Ooh. Did you know in France, you can buy wine in a vending machine? Seriously, you can go on it. See, last time I was there, cruising down the 4, which is the main road going down the highway from the north of France to the south of France. Okay, we pulled into a rest area and we got some Dijon mustard. We got some charcuterie and we got some wine out of a vending machine. We put in a couple of, and there it comes, just like it was crazy. But a vending machine, think about it. You make one investment, $24.47, a little less than 2,500 bucks. Okay? And every single week, I'm going to sell a covered call, which means selling somebody the rights to buy it from me at the same price I just paid. So if I just paid $24.78, I'm going to sell it for $25. Well, the profit's already there, and the market maker is going to give me an additional $53 per share this week. And then next week, he'll give me something different. And the week after, something different. The week after, something different, until it hits my target. Can you imagine that, doing a trade on a company that consistently increases its profits every year? That means the dividends get higher and higher. I mean, isn't that why people buy dividend stocks in the first place? To get a portion of the profits? Think about it. I mean, why else are you investing? You're investing to make money. Well, why? How else are you going to do it? You follow someone who's already doing it. That's pretty easy. Learn the simple stuff. What's the best stock to invest in for covered calls? Avatar, how are you doing today? Usually, I would suggest dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on old Wally's list. That's the name of it. No, that's not it. Walmart. Sam Walmart. No, not Sam Walmart. Who am I thinking of? Oh man, don't get old. The mind is one of the first things to go. Warren Buffett's list. That's it. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, anything on Warren Buffett's list. Those are the good companies. Think about it. He's not going to pick anything that's not good. And then the dividend kings, that's the top of the line. You can't get any better than a dividend king. Let's keep on going. All right, so let's save this one. Oh, wait a minute. We got to figure out the math. We're going to take the profit, 53, and then we're going to divide it by the investment, 24.47. 24.47. That comes a grand total of 2.1%. Now remember, I told you earlier, I'm looking to get 1% per week because 1% every week is over 50% for the year. If you're okay with that. Avatar, good. Hope you're good too. Wonderful. Tom Hart, thank you. What about dividend stocks? I love dividend stocks, Avatar. Okay, so we're at 2.1%. So we're going to save this one. Give it a minute. Give it a minute. Wednesday. Here we go. Here we go. And there it is. KHC Kraft Heinz. Whoops. Kraft Heinz. The 6th of March. It's not this Friday, it's next Friday. Okay, it's 10 days away. Okay, this week it just wasn't paying out. The $25 call option. Here's my profit, 53. Here's my investment, 2,400. That's 2.1% for 1 week. Actually, it's a week and a half, but you don't know what I mean. So let's save this one. $2.1. All right, what do we have next? Next. What do we got? Halliburton. What has been happening to ACN? Philip, sit tight. We'll take a look at that in a minute. Right now, we're going to take a look at Halliburton. Halliburton's next on the list. Halliburton. I don't even have a song for that one. Halliburton. No. That was quick, wasn't it? No to Halliburton. I don't buy anything at the high. It's at the high of the year. Why would I? Z? Seriously? Z? Why are we buying at the high of the year? That makes no sense to me. Philip, what's happening with ACN? Let's check it out. ACN, here we go. Holy cow, take a look at that. The high, the low, where was it? Where is it? Look at this, down, up, down, up, down like a rock. What is going on with ACN? Philip, sit tight. What do we have going on here? Look at it. Down. Now we're at 199. Well, here's my thought. If you really like ACN, give it a few days. Keep your eye on it. It's looking for a bottom. They call that bottom fishing. Looking for the bottom. They show up. Stocks go down until they're done. Well, apparently, it's not done going down yet. It's got a little bit further to go. So nobody wants to take a look at TSX. All right, Mr. Nobody. Oh, it's an ETF. ETFs, no options, no thank you. Now, you're new here, so I'm going to let you slide, but normally, no. Weekly options only. Thank you there, Nobody. All right. Turmoil Oil. Yep, I saw that. Do you trade futures? No, I do not. No futures. Thank you there, Vista Veda. Just dividend stocks. There we go. To mirror your camera, selfie camera on the iPhone. Oh, I love this one. Go to settings. Camera the toggle switch to mirror front camera. Worked on 12, 13, and 14. It's not working on this one because somebody already gave me that advice, and no, that does not work. Not on this camera anyway. I don't even know what camera this is. Uh-oh, Steve wants to take a look at fish. F-I-S. Try it again. What is that? Fidelity National Inform? All right. Joey, what's happening, Joey? All right. I'm not quite sure about this one. Up, down, up, down, up, down. Yeah, that don't look too good. Look at your last 30 days. Down, up, down. So it's still in a downward trend, just slowing down a little bit. All right, what else do we have here? Uh-oh. Ormo options trader. I don't do NVIDIA. The reason I don't do NVIDIA, it's not consistently profitable. Okay, it's 185 bucks and it pays 1 penny dividend. Yeah, no thank you. I'm here for cash flow. I'm not here for something that's going to go to the moon because it just doesn't do me any good. All right, what else do we have? All right. Kahwana wants to take a look at Costco. Now, Costco is a little out of my price range. Just a little. I don't like buying stuff that's $1,000 a share. Seriously, $1,000 a share? I can make the same amount of money, if not more, on a $5 and $10 stock. Why would I want to pay $1,000? That sucks up too much of my money. Okay, $9.98. So the 1,000 is going for 20 bucks. Okay. Let's take a better look at it. Down, up, down, up, down. Well, definitely looks like she's going up. She got 2 days to the upside. Okay, the bottom was on Friday. Monday was higher. Today was higher. Could it be day 3 tomorrow? Higher yet again? Well, next week's 1,000s are going for almost 20 bucks a piece, $19.90. Well, let's take a look at it. Now, this is going to hurt you guys. Wait until you see this. Are you ready? Covered stock, $1,000 a share, one contract. Here we go. You ready? All right. Buy one covered call, Costco. 6 March 26th, that's next Friday. The $1,000 call option, $2,200 is the profit, $97,000 is your investment. So this is definitely a stock for a different ball game because it's out of my price range. But we'll look at it anyway. Let's do the calculations. Okay, 2,269 divided by the purchase price, 97,731. Good. This is for the big league people who like to do Costco, $1,000 shares. Well, this one's 2.3%. 2.3%. Now ask yourself a question. I can get 2.3% by investing $97,000, or do you remember the stock we saw like 2 seconds ago? I can get 2-point-something% with $2,500. Do you see the difference here? And how far down can a $20 stock go? It could go to 0, but imagine if it fell in half from 20 to 10. All right, that'd be a little uncomfortable. But you got $1,000 shares and it goes down to 500. It's still a 50% drop. Why does it feel worse? I mean, think about it. It feels worse losing $500 per share as it would be losing $10 a share. It's still 50%. But anyway, let's save it because I'm sure somebody likes it. Let's do this. You ready? I'll have to figure that one out a little easier. There it is right there. Costco. One covered call. Costco. Woohoo! 6 March. That's next Friday. The $1,000 call option. For those of you who like that kind of stuff. 22.69 is the profit. 97,000 is the investment. It's 2% profit. Actually, what's the exact number? 2.3%. 2.3% is not bad for 1 week if you think about it. If you got $100,000 to put into Costco. Some people do. 2.3. So we could do KHC, which is Kraft Heinz. Okay, we can put up $2,400 and get 2.1%. Or we can do Costco, put up $97,000 and get 2.3%. I don't know about you, but 2.3, 2.1, pretty close. All right, what do we have next? Next. All right, Quentin, how are you? Kawana, thank you for that. Tammy, good afternoon. Kennison, good evening. Christian Kaba, welcome from Connecticut. How are you today? That guy, XRX. Let's check it out. XRX. What is it? Recursion Pharmaceuticals. Enza, good evening, and how are you today? They cannot find that symbol. So that usually means it's a no. Okay, sorry, that guy. Can we look at Bank of America? We looked at Bank of America like 5 minutes ago. Eric, Hertz. Gotta love Hertz. HTZ. I actually have some Hertz. I do. All right, Hertz. High, low. Where was it? Where is it? Look at it. Down, up, down. All right, we're at 440. The 450s are going for 34. I don't know about you, but that's close to 8%. 8, yes. I did say 8%. Let's take a gander at it. Calm, how are you doing today? Questions and concerns. Hello, hello. All right. So let's take a closer look at this. A year ago. All right, gonna need the glasses. A year ago, we're at 418. Now, we bottomed out in March at 324, topped out in April at 944. So it went from 344 to 944. That's $6. That's a big jump. That's over a 200% jump. Okay. Well, now we're back to 444. But look at your last 30 days. It don't look that favorable. 30 days ago was the high. Yesterday was the low. And today is 1 day to the upside. So think about it. 1 day to the upside. Here's your bottom. Now, you've heard it over and over and over and over and over again. You make money in the stock market buying low and selling high. Well, 30 days ago was a 30-day high. Now we're at a 30-day bottom. She's going to turn around and go back up again. So let's look at the 450s because we're at 444. And the 450s, I think that's going to be like 7 or 8%. Let's take a look. If you like Hertz. Sorry, it's always going to come down to that. Do you like this company? And that's a very big question. As a matter of fact, that is rule number 1. Never buy something you don't want to own. So let's take a look at Hertz. Covered stock. We're going to do the 440, the 450. There it is right there. And here's the numbers. Are you ready? By one covered call, Hertz, 6 March, which is next Friday, the $4.50 call option, $42. That's it. $42 is the profit, but $408 is your investment. That's going to be a nice return. Wait till you see this one. Calculator, take the profit, 42, divided by the investment, 408. And that comes to a grand total of 10%. That's a big one. I'm going to write that one down, Hertz. Yeah, I think I might play some swappy changey tomorrow and buy some Hertz. We'll see. Okay, so definitely going to save that one, of course. You know, I probably should check and see if there's any bankruptcy notices, any foreclosure notices, any lawsuit notices. What's going on with Hertz? Why is it at 440? I don't know. Here we go. Hertz. One covered call Hertz. 6 March. That's next Friday. 450 call option. 42 is the profit. 408 is the investment. That's a 10% return for 1 week if you like that company. And it's always going to come down to that. Do I like Hertz? Is this a company I want to invest my money into? It's either yes or no. Yes, no, yes, no. Let's check it out. All right. Ten percent. That's a big one. We got 2 more to go, and it's at 10 o'clock. Okay, what else we got? Hey, Enza, how you doing? User 329160 wants to take a look at X on mobile. Steve wants to take a look at fish. We looked at fish. It was already a no. Sorry. Exxon Mobil, you say? Well, let's get out of this. XOM. Ooh, that's a tough one. Look at that. The high of the year. She pulled back. Now she's there. That's too close. A little too close for comfort for me. Ooh, Dr. Corey wants to take a look at, I believe, isn't that Smuckers, SJM? It is, Smuckers. Sorry, dude. Smuckers is a monthly. Sorry, Doc, you knew that. SLV is the hero we all need. Triple X, what's going on? SLV is the hero we all need. Okay. All right. The bottom's here, the top's here. She shoots up, pulls back, back up again. 79. The 79 is going for 455. So that's over 4% if you like SLV. Look at the momentum. We're down here under 30 a year ago. Shoots up over 200%. The 200%. Now she's pulling back down again. I don't know. What do you think? Number's kind of crazy, isn't it? All do SLB calls 90. All do SLV 90 calls. Got a little problem with that. The 90 call. All right. Let's see this for a second. Now, my assumption, you want to do the 90 calls 90 days out or the $90 call strike. And you're talking about buying one. So let's go out 90 days into May and look at the 90s. There it is, right there. $1.36. Okay, so we're at 79. The 90's right here. The 90 is going to go for $1.44. So in order just to break even, it's got to hit 91.44. So you don't start turning a profit until 91.50. That's right, it's cheap. Yes, but what makes you think it's going to go up? It probably will. I mean, it topped out at 110, dropped off. Now she's shooting back up again. I don't buy options because most options, cheapest win in the lifetime. I have a thesis. Cool beans. It's not what I'm looking for. What I'm looking for is simple, safe, predictable trades. That's not predictable. That is, what do they call it? Speculative. I don't do those kind of trades because I'm not looking for speculation. I'm looking for safety, predictability, consistency. As appetizing as that may look, and as much research as you have that goes behind it, great, awesome. I wish you the best of luck. It's just not what I'm looking for. Austin, what's happening? Outlandishly Norkel. Okay, outlandishly Norkel. Wendy's is a monthly. So I don't do monthlies. I think we already said that. W-E-N. W-E-N. Okay. Down, up, down, up, down, up, down. Actually going down at the moment, it's not a good opportunity. Why am I looking at May? Oh, I know why. Okay, Wendy's is actually coming down. Doesn't really make sense to jump into it. Okay, I have an iron condor deployed at 78. SLB put 75, SLB put 79, SLB call 85.90, all 90 days. Okay, I wish you best of luck with it. It's a lot of moving parts, and it's perfect for an advanced trader. Most of the people here are beginner traders. Kind of complicated, as you know, to have them try to figure that out. All right. Can you do PANW? What is PANW? PANW. Oh boy, this is going to be a no. If you really like it, look at this. Bottom of the year. Same story as the last stock. If you like it, it's at the bottom of the year so far. So is it going to go lower tomorrow or is it going to go higher? We just don't know. So I like looking at them when they drop like that. 30 days ago was a 30-day high. Now today is the 30-day bottom. You make most of your money in the stock market buying low and selling high. Well, you can't get a better opportunity than right there. But, figure it out. Do you like the company? It's yes, no question. All right, what do we have over here? Ortega wants to take a look at Mara. M-A-R-A. Yes, I do have some Mara, and ooh, it is bouncing off the bottom. Check that out right there. Okay, the high, the low, where was it? Where is it? Look, it's down, up, down, up. The 805s, the 8s are going for 58. Hell yeah, that's a big chunk. But here's the thing. Mara doesn't have any dividends. So how do you know when it's going to move other than looking at this? So let's zoom on in and see what that looks like. Here's your last 30 days. Okay, 30-day high, 30-day bottom. Now she's going up slowly. Okay, the high, the low, where was it? Where is it? Look at it. Down, up. Pretty simple. Duke, how do the dividends affect the option? Duke, the dividends don't affect the option. Let me tell you why we're looking at the dividends. Okay, haven't done this in a while, Duke, so give me a minute. Get this baby set up. All right, Duke, you ready? This right here is called well, let's do this. This is called an EX dividend calendar. whatever. EX dividend calendar. What are we using it for? What we're doing with it, Duke, all these little green dots you see here, okay, all those little green dots represent companies that have increased their profits through their dividends for at least, oh no, those are weekly options. They just have weekly options, that's it. I was looking at the wrong list. Hold on, this is the list I was thinking about. That one. Each one of these has 25 years of increased profits. Those are the ones that I like. Well, here we go. Anytime we're looking at a dividend, specifically, Duke, because a dividend is a portion of the company's profits that they give back to us. Okay, the company's profitable, they share their profits with us, the investors. Now, there's two different types of companies. Company one will take all the profits, put it back into the company for capital growth, so your stock grows faster. The second company, they take the profits and share them with the people, the buyers, the sellers, the investors. Okay? Those are the companies I want. Bro, why do you have one stream? I don't. I have 9. Okay? Pepsi World, 9 streams. Anyway, so do you like companies that have dividend? Now, the reason I like dividend companies is because they're consistently profitable. FNMA, thank you. FNMA. All right. Thank you. All right. FNMA, what the hell is that? We'll take a look at that in a minute. All right. So the reason why I like dividends is because just before the EX dividend date, let me explain the dates for you. Date number 1, there's 4 dates to remember. Date number 1 is the announcement date. That's when the spokesman comes out and say, hey, this is what we made this year. This is how you're going to get yours. We're going to share the profits. You're going to get yours there, and it's going to be wonderful, blah, blah, blah. It's the announcement date. It's when they come out and they publicly announce how much money they made and how much you're going to get through a dividend. They're going to share the profits. The announcement date, date number 1. Date number 2, the EX dividend date. The EX dividend date is the last day the stock trades before the dividend is paid out. So if you want to collect the dividend, you got to buy it before the little green dot. Okay? And then date number 3 is the date of record. Whoever owns a stock on the date of record is entitled to the dividend. Plain and simple. And date number 4, the payment date. 4 dates. Announcement date, that tell you what's going on. The EX dividend date, that's your last warning. Well, we're closing today. Buy it now or forever hold your peace, that type scenario. The date of record, whoever owns it on that date gets the dividend, and the payment date. That's the only reason I do the dividends, because they're consistent. They do the same thing over and over and over again. So if the stock goes up just before the dividend date, that tells me when the stock moves predictably 4 times a year. Because almost all of these companies up here, almost all of them pay quarterly every 90 days. So think about it. You get a good company, right? It pays 4 times a year, every 90 days. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, September, October. Wait a minute. January, February, March. April, May, June, July, August, September, October, November, December. Brain fart, just like I forgot. Anyway, so there's 4 quarters every 90 days or every 13 weeks. Think about it. You come up with a list of stocks, throw it into the calendar, And the calendar will tell you what stocks to buy this week or what stocks to look at this week. Check this out. Granger, IBM, Kview, Target, ExxonMobil, CHD. Oh, I don't know what CHD is. CTAS, Emerson Electric, Smuckers, 3M. I don't know what that one is. But those are the only ones for the second week of February. Look at the third week of February. ADM, Archer Daniel Midland, AFL, Aflac, ED, Consolidated Edison, PPG. You know, I like to say PPG what it is, but it's PPG Corporation. There's no, anyway, it's not listed. I'm sure if I dug deep enough I could find it, but it's just PPG Corporation. But anyway, the calendar tells me when the stock's going to have the dividend. When the dividend's coming up, the stock has a tendency to increase in value. And when you know when the stock is going to increase in value, you get a good idea of when to buy it or when to create some type of a strategy. Because there's so many different strategies out there. What do you want to do? Because most people, if you ask them, and I have, if you knew a stock was going to go up, what would you do? And most people say the exact same thing. I'd buy the stock. See, those are the uneducated people. Because why would you buy the stock and be limited to what you can get? Because if you know it moves predictably, wouldn't it make sense to do a trading strategy that capitalizes on that information? Okay, so the strategy I'm doing, simple, safe, predictable, consistent, 1% per week. It was created for a 9-year-old. It was supposed to be simple. Simple, safe, and predictable. It's exactly what we're looking for. All right, next. I'm hearing noise in the background, and I'm trying to think to myself, where's that noise coming from? I don't know. Pepsi World, I got 2 of you in a row. That's cool. Yeah, well, we're on 9 platforms at the moment, and there's about a half a dozen more I want to add on before the second quarter. I think that'd be cool. What platform am I using? This platform here is called Think or Swim. Tom Fox, thank you for that. Made 6,000 today. Woo, nice going, Addie. Duke, do you avoid options around earnings? No. Because see, the way I look at it, Duke, I never buy something unless I really like the company. That's rule number 1. Never buy something unless you're okay with owning it no matter what. Okay? Rule number 2, never sell at a loss. It just doesn't make any sense. Do you have a consistent list you look for weekly? Z Daddy, what's happening? Do you have a consistent list you look weekly? Do you have a list? Holy cow, the exact same question 3 different times. 4 different times. Holy cow. All right, Michael Kelly. Hey, James, when you sell a covered call, do you place a buy order simultaneously? No. Tax time, sell for loss, make tons of sense. Okay, notification. I'm terribly sorry, dude. I don't ever sell for a loss. I think I had 4 losses last year. That was it. But, okay, think about it. Okay, I got 7 different accounts, and I trade almost every single day. That's over 2,500 different trades and only 4 losses. That's pretty damn good. The one real green man. If a company is going bankrupt and you knew it was going to 0, you would try to get your money back if it went down. No. Wait, see. I like companies that have historical performance. You know, ones that have been around for decades and decades and decades. All right? Like, yeah, that's about right, Rand. Yep. What's your thought on LINC, Randall? Why the obsession with dividend stocks? It's an automatic tax bill. Oh, Ran. All right, I got something for you, Ran. Hold on. Let me get a sip of my tea. All right, Ran, you ready for this? All right, I gotta get comfortable here for a second. All right, Ran, you ready? Now, you're concerned about a tax bill. Okay, a lot of people feel that way. Is dividend time the same as earnings time? No, not necessarily so. Okay, so Ran, here you go. We're talking about trading, we're talking about money, we're talking about investing, we're talking about taxes. Wonderful. Here's a thought. What if, hypothetically speaking, you open up a corporation in a state that has zero corporate taxes? Okay? Zero corporate taxes. You following me so far? Do you see where I'm going with this? Now, let's say, hypothetically speaking, your corporation is doing so well, you have all this money left over, and you got to figure out a place where to put it. Maybe the corporation opens up a pension fund for the employees. Makes sense. What do you do with the extra capital? Well, you put it in the pension fund. Now, the pension fund is in a corporation in a state where there are no corporate taxes. So, the fund that you have thus invests. What are you investing in? Well, we're investing in good dividend stocks that consistently give us 1% a week, 50% a year. So I'm making 50% a year in my corporate pension fund, okay, in a state that has no taxes. So what's the problem? Number one, it's a corporation. Any profits made by a corporation in a state where there are no taxes, well, you don't have to pay taxes. And if I did have to pay taxes, any losses on the corporation can be offset by the profits. You sure you want to get in this conversation with me? So it's your responsibility to legally pay the least amount of taxes as possible. And that you're going to need a tax strategist, not a tax advisor, not a CPA, not a bookkeeper, a tax strategist. And then someone who set up a trust for you, or a foundation, or some type of family entity that avoids taxation. So if you're asking about a tax bill, it's kind of like the guy going to the Rolls Royce dealer and say, hey, I like this Rolls. Ooh, that Bentley's nice. What kind of gas mileage does it get? Nobody who's going to buy a Rolls Royce or a Bentley asks about the gas mileage. Same thing. If you're getting 50% return on your money, a tax bill is one of the least things you're worried about. Because if you thought even a close idea of the possibility of what kind of money that could mean in the long term, think about it, long term. For me, long term is 30 days because I'm past my prime. I'm 62. I'm retired. I don't work anymore. All that fun stuff. But for those of you in your 20s, your 30s, your 40s, your 50s, you still got time to go. And however much time you go, you can really explode your growth or your wealth if you're doing it 50% per year. That's freaking nuts. But if you're going to do that, set it up the right way right from the beginning. Get it out of your own personal name. You want it protected. You want it either into a trust or you want it into a corporation, specifically a corporation in a state where there's no corporate taxes. And there's a bunch of those. And then you want to set it up in a way that's in a corporation and you're just the CEO, which means you get the benefits of it. But if something happens to you, it's a simple one piece of paper saying, hey, the CEO has retired and there's a new CEO. It's so much easier and it avoids probate. It avoids a lot of crap. Don't be so obsessed of keeping things in your own name. Okay, so tax bills are for those who want to pay taxes. If you don't want to pay taxes, figure out a way to not pay taxes. Okay? And anyway, Mr. Rand, anytime you want to go one for one, check out all my trades for last year. Where are they? Hold on, I'm going to bring them up right here. Okay, there's that. There's that. Right there. Right there. Let's move it on over. Trades for last year. You see them all? They're all right there, Ran. Take a look at each one, okay? Rolling order, 47, credit, 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 debit, debit, yeah. Green is when you buy, red is when you sell. The credit is the little profits that I make. I make over 1% every single year for the past 15 years. Okay, I share 3 accounts publicly. Okay, Rand, check it out. 3.8%, 0.8, 4.4, 3.1, 3.6, 4.2, 3.6, 1.1, 1.4, 2.08, 1.17, 1.3, blah, 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 blah. I can do this all day long. I can even go all the way back if you like, Rand, all the way back to, let's do this. Check that out right there, Rand. My very first blog post, August 31st, 2011. That's a long time ago. In 2011, my average monthly was 9%. 2012, I slipped a little bit, got 8.7, and then 2013 dropped all the way down to 3.4, 3.3. That wasn't very good, 2013. But there's a whole bunch of them there if you want to take a look. February 2013, I was averaging 1.3% a week. Okay, 1.3% a week. It's still nice. Let's get out of that. All right, let's keep on going. What's my thought on LINC? LINC. What is LINC? LINC. Hell no. Who came up with that? LINC. Deep fried fish. I don't do monthlies, number 1. Number 2, I don't buy at the high of the year. No. Doug Fryer, is dividend time the same as earnings time? Not necessarily so. Claude's right. Wyoming is one of those states where it is anonymity. You don't have to tell who owns the corporation. And there's no taxes on corporations in Wyoming. Why use different accounts? Duke, I don't trust the government. That's why. What was my largest loss? Greed. That's a very personal question. Just to let you know, greed. You ready? Okay, my largest loss was, ready for this one? 91,000 1 week. That's my largest loss. What else do we got? Thank you there, Mr. Randall. Kebo, Dallas, Texas. Richard, MBA. Oh, okay. Thank you for that. Trade with a Roth IRA is tax-free. Now, sorry, Greg. Trading with a Roth IRA is not tax-free. It is tax-deferred. Because you can bet your ass in 20, 30 years when you want to retire and take your money out of a Roth, yeah, they'll figure out how to tax it again. Randall ain't talking no more. Yep, I saw that one. Canva USA, how are you? Claude, how you doing there, Claude? I just gave free game. Okay, thank you. Eklisa, all right, thank you. Leafs fan. That guy wants to take a look at AES. What is AES? AES. Interesting. Now, I'm going to say no to AES because I don't buy at the high. Sorry. All right. Healthy Scratch. FNMA. What is that? FNMA. Federal National Mortgage. I'm going to say no because there's no options. Yeah, Randall, I know it's tax-free, but think about it. You honestly think that in 10 or 15 years, the government's not going to find a way to tax a Roth IRA? I mean, we started a revolution over a 2% tax. Okay, now we're up to what, 40%? And you think that they're not going to figure out a way to screw that up? They will. They'll figure out a way to screw it up. PPG was initially Pittsburgh Plate Glass, as they were originally a glass manufacturer. Cool. Can you pull out of a pension fund penalty free? If it's a private corporation and you're in a state where there's no corporate taxes, I couldn't answer that. I wanted to say yes, but I can't really answer that question. But here's the thing. Why would you want to take money out of your pension account? Think about it. Wouldn't you prefer to just borrow money from the company? If you have your company set up properly, think about it. Because if you take money out of your investment fund, maybe it might be taxable. But if you borrow money from the corporation, if you have your corporation set up in a point where you can borrow money from it, borrowed money is tax-free. Think about it. Why take money out of your account when all you can do is just borrow money from the company? And that's tax-free. CK, check. Okay, we looked at that one. No. Healthy Scratch, got it. Mauricio, NVO. NVO. Interesting. Now, what am I finding interesting about NVO? Look at this big drop right there. Look, at the high of the year, 95. Now she dropped down to 38. Well, I'm not too happy about that because I actually have some NVO. And I think I have NVO in the 60s originally. Now it's down to 38. I don't care because I can always sell covered calls against it and bring in some premiums. If I go 4 or 5 strikes out of the money, I'm still bringing in enough to help offset my bills. And I'm okay with that. But let's take a look at it. The last 30 days, we're up at 64. Well, now we're down 38. It gapped down once, twice, 3 times, 4 times, 5 times. It gapped down 5 times in the last 30 days. Well, what do you think? Down, down. Well, is this the bottom? I don't know. Now, I'm not buying any more NVO until it stops and turns around and does something halfway decent. Okay, this right here, I go for 3 days to the upside. 2 days to the upside, and on the 3rd day I jump in. Well, the bottom was here, 1, 2, and then came back down again. So here's another bottom here, which I'm waiting for 2 days to the upside. And then on the 3rd day, I will jump in. So yeah, I'm waiting for it to turn around, but as I'm waiting for it to drop, I'm still selling covered calls every week. All right, so I'll wait a little bit for this thing here to find the bottom and turn around. I'm actually going to write it down in my book for next week because with being that low is a good possibility that it could actually turn next week. Oh wow, we got a nice list so far. We got about 30 companies for next week to take a look at. Well, that's always a good thing. All right, CRSR. Conway, what's happening? CRSR. What is it? Corsair Gaming? All right, I don't do monthlies. I thought I already said that. Sorry, no. No, no, and no. Thank you there, Oscar. What do we have down here? Can you pull money out of that pension fund penalty free? You know, Mike, to be 100% honest with you, I really don't know. But here's the thing. I'm not going to take money out of my pension fund anyway. I'm just going to borrow money from the corporation. Because being a corporate officer, I'm entitled to borrow money if I need to. Because that's the way the corporation was set up. And if I borrow money from the corporation, well, paying it back, it's still a tax write-off, number one. And number two, I don't have to pay taxes on borrowed money. Hope that makes sense. You like that one, Mike? Great info. You're welcome there, Mike. What's good volume and good open interest on an option? Hold on a second there, Mr. Michael. I really want to understand this. The one real green man. Which part do you really want to understand? I'm here every night. Sunday, Monday, Tuesday, Wednesday, Thursday. I take Friday nights and Saturday nights off, but other than that, I'm here. You can ask any questions you want. Riley wants to take a look at Pfizer. Give me 1 second. We'll take a look at Pfizer in a minute. Kevo, FCX, huh? All right. What do we got here? What's the difference between what's good volume and good open interest? Well, here's the thing, okay, Mr. Michael. The stocks that I like are dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then anything on Warren's list. So those 5 lists right there, there's 300 of the top companies. They're consistently Now, I don't do non-dividend stocks because I'm looking for cash flow. I'm not looking for capital appreciation. So those are the companies I'm looking for. So the open interest and the volume of most of those companies is high enough that I really don't need to worry about it, because all of them are over 20 years old. Because one of my criteria is 2 decades of consistent profits. Okay, you can't get to 2 decades unless it's doing relatively well. Canva USA, NRO, ORC, and DHS. Well, that's a mouthful. Let's check them out. Okay, Jason wants to take a look at Kroger. I want to learn the covered call and the pricing. When do you lose out? Here's the thing, okay? The one real green man, I try not to lose. Okay, last year I had 4 losses. They're on the board. Okay, when I do a loss, I share it with everybody. It's like, oops, I made a mistake. And one of them was because I hit the wrong button. Okay, most beginners lose money by hitting the wrong button. All right, so let's take a look at these. We got Pfizer, PFE. I'm a little iffy on this one. Take a look at this. Okay, 30 days ago we're here. We shoot up, pull back, shoot up, pull back. Now she's going up again. Here's our 2 days right there. Okay, today and yesterday. There's the bottom there. Let's zoom in a little bit closer, see if it makes sense. Okay, there it is right there at the top. Bottoms out, 1 day, 2 days. So tomorrow, if she opens up above 27.14, that will be day 3 for me. So what does that look like? That looks like a 27. Let's look at the 27. All right, 27 it is. Now you weren't interested about the pricing. The pricing is relatively easy. Look at it this way. If I'm buying the stock at 27.14, I'm going to sell it for the closest strike price there is. And those are preset. Okay, they're right here. 25.50, 26. 26.50, 27. 27.50, 28. 28.50, so on and so forth. So if I'm buying at 27.14, I'm stuck between the 27 and the 27.50s. Whichever one you think best fits your trading style. For me, I do the 27s because I'm more interested in safety as opposed to profitability. So let's take a look at the 27 and see what it says. Remember, I'm looking for 1%. That's it, just 1%. So let's see if we can get it. Okay, get out of there. I want to change this to covered stocks. I want to take a look at just the 27, just one contract, so you understand how much you can afford. Because once you know what one's going to cost, well, you can multiply that by 5, by 10, however much money you have. So here's the numbers right here. Buy one covered call, Pfizer, 6 March 26, that's this coming Friday. Not this Friday, the Friday coming after that, all right? The 27 call option. Okay, so right now, after hours trading, the stock's at 27.11. So I'm actually selling it for less than I'm paying for it. Think about that for a second. I'm buying it for 27.11, selling it for 27, and still walking away with the profit. How am I doing that? Let's watch. Okay, so I'm going to buy the stock first thing in the morning. I'm going to sell the option first thing in the morning. I'm going to collect maximum profit, $44. What is this one trade going to cost me? Well, for 100 shares, one contract, it's $2,600.56. Cost of the trade, including commissions and fees. It's right there. The neat thing I like about this strategy that I created for my 9-year-old, remember, she's 9 years old. She said, Daddy, can you teach me? So to teach a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. That number 5 always gets people. No way for her to lose? Yeah. Simple. Think about it. Now, unlike you guys, I have no control over what you do. But I did have some control over what my 9-year-old daughter did. So for my 9-year-old, it was nothing exists in the world except for the stocks on your list. Never buy anything not on your list. The list was simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. It's about 300 stocks. That's it. That's all she ever looked at. Well, she's 9 years old. I don't want to make it complicated. She's not looking to hit a home run. Uh-oh, got a low battery. A low battery. What did you say? I got a low battery every day. Got a low battery. All right. So let's check out the profitability. What is the rate of return if we're going to do this Pfizer trade? So we need the calculator. Calculator, put the profit, 44 bucks, divided by the investment, 26.56. What does that give us? 26.56, grand total of 1.65% for 1 week. I don't know, does that sound good to you? 1.65? Sounds good to me. I'm going to save this one. 1.65. $1.65 for Pfizer. Woohoo! All right, what do we got? We got 4. We need one more. And here it is. One covered call. Pfizer, 6 March. That's next Friday. The 27 call option. $44 profit. 2,600 is the investment. That means it's a 1.6% for 1 week. Think about it. 1% a week is 50% a year. Well, how much is 1.6? It's got to be at least 70 or 80, right? I don't know. Sounds good to me. But do you like Pfizer? 1.6. It's a good question. Do you like Pfizer? It's either yes or no, right? Gloff. What's happening, Gloff? All right, so Canva wants to take a look at NRO. What the heck is NRO? All right, going back to the beginning. Look at NRO. NRO. All right, Canva. Sorry, dude. No options. No thank you. Wow. 196 million shares traded on that thing today? That's a lot. And it has no options. Holy cow. Up, down, up, down, up. Well, it's definitely going to the upside. If you like it, I'm not going to trade it. I don't do stocks that don't have options. I'm looking for weekly cash flow. I don't want to buy something, sit here and look at it move. No. ORC. Orchard. No, I don't do monthlies. DHS. No, I don't do monthlies. All right. No, no, and no. Riley. Take that 1.6. Get initial investment back, kick back, and sip the pina colada. Riley, I'd do a strawberry margarita myself. Pina coladas, don't really float my boat. Okay. With regards to the covered call, can you go into detail? Do you have to sell if the price is up? Okay, so the real green man, the nice thing about covered calls is when you buy the stock, you own it, you can do whatever you want with it. However, when you sell an option, a call option or a covered call, you're selling somebody the rights to buy it from you at a certain price by a certain date. Okay, once that person pays it, you're locked in. You can't do anything until that option expires, or they exercise it, or you buy it back and get it out of the way. So if the stock goes up while you have the covered call in place, you can't do anything because you're doing two different things at once. You're doing the covered call to get your safe 1%. Or are you looking at the price escalation, thinking to yourself, "Ooh, if it goes up, I want to take that." It doesn't work that way. Once you sell an option, you're linked in, you're locked in. Ali, MPL. What the heck is MPL? Mercantile Ports. No options, no thank you. Can he roll it? Yes. Enza says you can roll it. Always take a look at, because when you buy and sell, once you're in the what do you call it, in the space, there's a lot of different choices that you can do. Now, some people only think of buying and selling. That's it. And they don't want to incorporate any options or any other strategies into their trading. They just want to buy, sell, buy, sell, buy. There's nothing wrong with it. It's just what someone prefers to do. I prefer weekly options and weekly trading because once you understand them and once you can see what's going on, it's a very safe trade. It's a very safe strategy. But you got to keep your head and you have to keep focused on your goal, whatever your goal is. Holy cow, we're done with all the questions. That can't be. And you know what that means? There's no more questions, so we might as well just call it a day. Kimberly, it is my understanding you first must own 100 shares first, and then you can use the covered call. Yep. Conway, GoPro, GPRO. No. Riley wants to take a look at Chevron, but GoPro, check it out. Top at 3, now she's down at 79 cents. Yeah, no thank you. And look at this, 0.00000. Yeah, no thank you. Sorry. Riley wants to take a look at CBS. CV Chevron. I should have done CBS. Hold on, Kevo. Okay, I don't bite the high. You know that. Altria Group. I still don't buy at the high. FCX. Didn't we look at FCX earlier? Same thing, Kevo. I don't buy at the high. Ali, TSLL. That almost looks appetizing. Let's zoom in, see what it looks like. Steve, KTOS. Ooh, we'll have to take a look at that one. Sit tight. What's going on here? TSLL. No real direction there. But take a look. Okay? Down, up, down, up, down, up. So it's at 15.25 right now. Let's see what the 15th would look like for Kimberly, DBN. We'll take a look at that in a minute. With regards, okay, got that one. Yes, I'm Edmund. Aisha Edmund. My name is pronounced Aisha. Check ELPC. Sit tight. We're going to do TSLL. We got a few more to go. So TSLL at 15. All right, let's do this at 15. There it is. Let's get rid of that. Let's do this. And let's do this. Here we go. Here's the numbers. You ready? 1 covered call TSLL, 6 March 26th. That's next Friday. 15 call option, $66 is the profit. $14.34 is the investment. Think of it this way. If I'm going to buy a vending machine, it's going to cost me a couple of $1,000. And that couple of $1,000 investment is going to give me a weekly cash flow. Well, this is basically the same thing. Running gold. If you own a different stock, then what you want to make a call on, how would that work? Running gold, could you explain that a little bit differently? If you own a different stock, then what you want to make a call on, how would it doesn't work that way. You can't, no, it doesn't work that way. Riley, sit tight. All right, so let's check out the numbers here, see what that looks like. 66 the profit. The investment is going to be 1434. And that comes to a total of 4.6%. I don't know about you guys, but I think 4.6% pretty damn good for 1 week. What do I know, you know? $4.6. What do you think? 4.6 for TSLL? Sounds pretty good, doesn't it? Sorry, limited space. I'll try again. All right. You know, you can ask it twice. Ask it and then ask it another question. You know, do half the question, do the other half the question. Daniel Hunter. Good evening, James. I got business today. All right. Here we go. Number 5 for today. 4.6. Nice. TSLL. 6 March 26th. That's this next coming Friday. Not this Friday, next Friday. The $15 call option. 66 the profit, 1434 is the investment. It's over 4% for rate of return for 1 week. I know a lot. Haha. Mighty bargain. How are you today? Yep, you wouldn't believe how much I know, brother. This is just one topic. Oh, I can get going a whole bunch of other topics too. All right, so this is over 4%. I like this one. What was it? 4.6. Ooh, 4.6. Love that one. 4.6. All right. Dun, 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 dun. What do we got? What do we got? Steve wants to take a look at K-Toss. Doesn't it sound like a carnival ride or one of those carnival games? K-Toss. All right. Let's find out. K-Toss. What is that? Cadus Defense. Never heard of it. Let's check it out. All right. Here we go. The high, the low, where was it? Where is it? Where is it? Up, down, up, down, up, down. All right, what's going on? $90. The 91. Uh-oh, wrong screen. I'm on the wrong screen. That's why it looked different. Okay, 91. Let's go for 470. Ooh, that looks nice. Let's take up some of these questions before it gets too late. Okay. Aisha wants to take a look at ELPC. ELPC. Hell no. Okay, sorry, Aisha. I don't buy anything at the high, and I don't do monthlies. Weekly options only. Kimberly, DVN. DVN is coming off of a high. See it? It's dropping. Okay, and Riley, Conagra, CAG, we looked at last night. The numbers just don't look very good, the premiums. What's the worst scenario for your strategy? Hitting the wrong button or the company going bankrupt. That's about it. I mean, think about it. We're buying companies that have been in business for over 2 decades. That means they have historical performance. They have a product or a service that has been tried and tested. 2 decades is a lot when it comes to a corporation. Most companies don't make it past 3 to 5 years. And if we're only buying companies that have 2 decades of profit, that's 20 years of consistent increasing profits. We're eliminating all the questionable companies and only sticking to the good ones. What are your favorite trading indicators? Consistency of profitability and weekly options. That's it, just 2. Consistency of profitability and weekly options. That's the only 2 I got. La 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 la. I think that's it. You guys ran out of questions. All righty. How do you find stocks with weekly options? Nick, how do I find stocks with weekly options? Nick, are you ready for this? Nick, Chicago Board of Options Exchange, CBOE.com. Okay, CBOE.com, top right corner, where it says search weekly options. Simple, it's right there. They all have it. No, they don't. Not all stocks have options. And not all stocks that have options have weekly options, because some companies only have monthly options. Make sense? I hope so. All right, I think we're all done. Ali wants to take a look at, no, Augustine, I don't do SoFi, and there's a reason why I don't do SoFi. Okay? Aisha, you got it? Thank you. All right. Vigilante. I meant RSI, MACD, etc. I understood exactly what you said, Vigilante. Let me repeat it again. The only indicators I'm looking for: consistency of profitability and weekly options. That's it. I don't care about the relative strength index. I don't care about the MACD. I don't care about the Fibonacci retracement numbers. I don't care about the exponential moving averages. I don't care about any of that. The strategy was created for a 9-year-old. Simple, predictable, consistent is what we're looking for. It's not that difficult to find out. This is the low of the 30-day period. This is the high of the 30-day period. The stock went up. Now it's coming back down again. I try not to complicate things. It's for a 9-year-old. 9-year-old little girl says, Daddy, what are you doing? Can you teach me? You can't teach a 9-year-old complexities like you're talking. It just doesn't work. And then how do you keep her interest? MACD is not easy. Neither is the RSI. And then you're probably going to want to talk about the Greeks, the Theta, the Vega, the Rho, the Delta. If hey don't take options and stock goes down, you do options again and it sells, do you lose money? Mike, interesting question. No. Here's the thing, Mike. Thank you, Crystal Ball. Mike, when you buy the stock, you own it, you can do whatever you want with it. Think of it this way, Mike. If I have, like, let's say, a 68 Camaro convertible in my backyard, I push it out to the front yard, slap a for sale sign on it, $10,000. That's a good price for that car. So here's the thing. I own the car, it's mine, I can do what I want. I slap a for sale sign on it, 10 grand. Let's say Steve down the street comes by and says, hey, I like your car. Let me give you a couple $100, hold it for me till Friday. Great, but it's a non-refundable deposit. It means you don't get it back. And you don't get to discount it from the price. It's just say, hey, hold it for me, I'll be right back. That's all. That's all it is. The same thing with the stocks. Hold it for me, I'll be right back. Same scenario. So let's say Friday comes and he does not come back to buy the car. I keep that money, and then Monday I sell it to someone else. Same thing goes. The price of the car never changes. It's still, I want like $10,000. Okay, so let's say Tom, 2 towns over, comes by and says, hey, I really like your car. Let me give you a couple $100. I'll come back and get it for you on Friday. Okay, you do understand this is a non-refundable cash deposit that you do not get back even if you buy the car. Same thing. We're buying a company, a stock, a weekly cash producing asset. If I'm paying $43.28, that's always going to be my selling price. I would sell the 43.50s because it's the closest and it's paying 2%. So I will do it every single week until it no longer makes sense or until somebody buys it from me. Running gold, yes, I'm aware that most of the dividend kings are monthlies. I'm aware of that. Okay, but don't forget the dividend contenders, the dividend aristocrats, and the dividend champions. Mike, if the stock fell like the one you bought at 16, now it showed up at 38. Yeah, and let me show you something. All right, let's take a look at HIMS. You ready, Mike? Take a look. The high, 70. The low, 15. Where it was last year, 50. Where's it at now? 15. She dropped, went up. Dropped, went up. Dropped. This is where we are right now. Now, the reason, Mike, I'm showing you this is because I actually own HIMS at 45, way up here. And the stock is way down here. So I own it at 45 and now it's at 14. Think about it. I bought it at 45 and Jack and Jill tumbled down the hill and nobody was happy after all. This is where we are right here. It was way up here. Tumbled, 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 tumbled. Here we are right here. Now there's a lawsuit going on. Who knew? I didn't know. If I knew there was a lawsuit pending, I probably wouldn't have bought it. But I didn't know. All right, besides the point. So I'm in at 45 and it's at 15. Well, if I'm in at 45 and it's at 15 and I want to get my 1%, well, what's 1% of 45? 45. Well, take a look at this. The current price right here. The 45 right there. I can sell somebody the right to buy it from me at 17. So, well, where's 17? All right, that's kind of close, but still. We're here right now, and 17 is right there. Okay, I still got my 1% out of it. I sold it 4 strikes out of the money. 1, 2, 3, 4. Okay, so what's my risk? My risk is the stock jumps up past the 17. But how far past the 17 am I concerned? Well, that depends on what did the person pay for the option. Because you take the price of the option and you add it into the strike price. So now, where am I? Am I in HIMS? Right there. Yeah, all right. My mistake. I originally bought it at 52. I bought it at 52. Now it's at 15. All right, besides the point though. All right, so when I sold the option, I sold the 18 call. I got 58 cents, which is more than the 1%. Okay, because at my current price now, my average, because I did dollar cost average, is down to 38. Okay, so I sold the 58. Now I can wait until next week and push it out again. But next week I'll probably do the 18 and the 19. But I will always move it back and forth depending upon how much am I collecting in premiums. Let me open this up a little bit more. Okay, so remember my price is 38. Okay, it was originally 52, but now it's down 38. But look at all these premiums. This is at the money right here. That's the current price, $15.46. 15 is the current price right there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So way down here, I'm still getting something. But the further down I go, the safer it becomes for me. And remember, I look at my stocks every day. So as I'm looking and as it's moving up, I can move my strike price up higher also. so that I'm always bringing in some money. You got to remember where I'm coming from. I want some money coming in every single week. That's why I do weekly options. Thank you, Crystal Ball. George. Okay. Just bought 3,000 of T-Mobile. I'm loving it, but what do you think? Ooh, let's take a look at T-Mobile. 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 La 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 la. La 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 la. T-Mobile. All right, so let's do this to there. TMUS, T-Mobile. Okay, so here's a question for you. Okay, now you just bought T-Mobile, but where do you plan on selling it? Because the bottom's right here at 180, and now she's at 221. Let me zoom into that and ask you that question again. Take a look at the last 30 days. Back in January, we're at 180. Now we're at 225. So 180 to 225 is 45 bucks. Think about it, $45 on a $180 stock. That's over 20, 21, 22%. That's a big jump. So my question to you would be, Kenny, where's your exit? I'd like to be long if I can. Well, you own it. You can do whatever you want. You don't have to sell it. How do you move your strike price up during the contract? You're going to buy back the old one and then sell a new one. So now whatever you do, once you sell an option, you can't do anything else until you get out of that option first, which means you let it expire or you have to buy it back, one or the other. But before you do that, make sure all the numbers work. Remember rule number 5? Make sure all the numbers work. Is there a reason you always pick 5 stocks? You mean for tonight? Well, I can go all night long if I wanted to, but I do have to set some parameters. I don't like people taking advantage of my kindness or my stupidity, whichever way you want to look at it. Can you recap the calls that you have picked? Mauricio, hold on a second. Thank you. You're welcome, Kenny. But remember, Kenny, it's always going to come down to what did I buy? What did I sell? Where's it at? Where's it going? What should I do? They're all very simple questions. If you think about it, the 5 rules are very simple. Never buy something you don't want to own long term. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Number 4, weekly options only. And then number 5, make sure all the numbers work. Okay, what did I buy it for? What did I sell? What did I collect? Is that more than 1% or not? Is it a safe trade or is it not? Is it going up? Is it going down? Where's it going? The chart will show you and tell you a lot. What are the other buyers and sellers doing? Are they buying? Are they selling? Do you know weekly dividends? No, Cleon, I don't. Sorry. Cousin Nostro, what's up? What's up, buddy? Hey, I'm getting ready to leave. Dude, do you see what time it is? I'm getting ready to leave in 2 minutes. Do I like Robinhood? I like Robinhood, the option. I mean, the trading platform. The stock itself, they don't have any dividends and they haven't been around long enough. Just monthly? No, I like weekly options. Cleon, weekly options. Okay, there's a difference between a dividend and an option. Okay, any good stock in class Oh, yeah, sorry, Vigilante. Explain, please. Oh, you want me to explain? All right, Cleon, are you ready? Check this out. 27 February, that's this Friday. 6 March, that's next Friday. 13 March, 3 Fridays away. 20 March, 4 Fridays away. 27 March, 5 Fridays away. 2 April, 8 Fridays away. Fridays. weekly, every single week, weekly option. Now, monthly options, okay? O'Realty, March, April, June, September, December, January 2027, January 2028. These are monthly options. Monthly option can be traded once a month, 12 times a year, which means I would make 12 to 24% with the average trading that I've been doing. Now, if I switch to weekly options every 7 days, that's 52 times a year. So 1 to 2% for each trade, that's 50% to 100% by the end of the year. I prefer weeklies. I don't like monthlies. The numbers just don't work. If, as a new reader, I want $20 max, do you think there are enough good stocks outside the list you mentioned that have weekly options? Absolutely. Hold on a second. So here we go. Watch list. Let's get rid of this. Let's slide this all the way down here. Klingon, what stock do you recommend for weekly options? Check this out, Klingon, you ready? This list here are all the companies that have weekly options. So let's take a look at this. Look at this one, IRNT, 0.0012 cents per share. And it has weekly options. Imagine that. 83 cents a share, $1.55, $1.89, 201, 320, 415. Look at them all. There's literally hundreds of them. Hundreds of companies, all under 30 bucks. There's a lot of them, all under 30 bucks that have weekly options. CBOE.com. It tells you all the stocks that have weekly options. Can I operate with 50,000 in your strategy? Augustine, how are you today? What stocks do I recommend? Okay, Cleon, you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and anything on the Warren's list. Cleon, you ready? CBOE.com, Chicago Board of Options Exchange. Derek, did you add up the percentage indicator to show how much you're going to make? Or is that just a platform setup? It's just the platform setup, Derek. And if there is a way to do that, oh, that would be awesome. But I don't know, because I don't dive that deep into the platform. I only use what I'm looking to use, and I don't really look at everything else. You're welcome, Derek. Is a smartphone enough to day trade? Okay, so Vigilante, I don't day trade, but I do use Robinhood, and I do these trades on Robinhood, and I do it on Thinkorswim. I love Robinhood. I do. It's simple, it's easy, it's quick. All right, we're past 11 o'clock. We're done for the night. We're going to do this all over again tomorrow. Cleon, I am from the Caribbean. Can I purchase these trades? Yes, you can. That's it. We're going to call it a night. You guys have a great day. We'll do this all over again tomorrow. So, you guys over here, have a great night. And you guys here, have a great night. And you guys here, have a great night. You guys here, have a great night. See you again tomorrow. And done here.